Good morning, everybody. Welcome to the Greater Victoria Real Estate Show. It's December 4th. I'm Jane Johnston, and I'm here with...
Hey, everybody. Andrew Plank here with Roy LePage. And I just want to point out, we don't just roll out of bed and start this show. This is a well-oiled machine, and it takes a huge team of experts and people doing this behind the scenes. So I just want to throw out some support for them and just say just how great this show is because of their support.
And there's, So just so you know, our display is changing because the way everything is being displayed at the end product is also changing. So that's why we have Greater Victoria Real Estate Show with little tiny letters at the top.
Yeah. Anyway, I'm being a little facetious, but we end up getting some changes in the system, and we have to adapt in the last minute and throw things out. So we enjoy our little show, and it's not always perfect, but we're here and we're here for you. So let's go.
All righty. So today we're going to be doing our weekly stats update. Then we'll do our monthly market update. Jen Lowe is not well today.
Unfortunately, she is not with us. So we can't talk more. We can talk mortgages, but we can't talk mortgages intelligently.
All right.
Yeah. So in the last 7 days, again, should be ready for this. In the last 7 days, we've had 229 new listings go live, and that's versus 165 the week before. So we certainly had a bit of a boost in new listings. 124 properties went pending versus 108 the week before. 130 price decreases, again, a bump in price decreases over the week before, which was 93. And 68 properties expired this week as opposed to 148 the week before. Again, because we straddle between 2 months, there is some changes to these stats simply because some people line things up with the beginning or end of the month.
Right. Which strategically I don't think is a great idea, but anyway, it happens. So just think about it. If you're a listing agent, maybe don't expire your listing December 31st, because trust me, you're not going to want to meet your client on the day that you have a party. So John Carter agrees with us.
There you go.
All right. Our list to sale ratio this week was 54.15%, and that's compared to 65.45 last week. So we are down, and this is not unexpected as well, because we're at the end of the month last week and beginning of the month.
Again, yeah, because of those the straddling point. So 344 net unconditional sales in the month of, we're talking now about the month of November. We are in December, and pretty low because compared to the same month last year, we were 551. That's quite a significant drop. I think it was like 33% or something. I haven't done that. No, it wouldn't be 33, but it was a pretty significant drop in numbers. I know Jane will do the calculations while I'm speaking. 655 new listings this month versus 802 last month. Again, November. And we had, in terms of total active listings on the Greater Victoria Real Estate Board, 3,201 versus 2,836 last year. So we're up about, little under 400 listings for actual inventory over last year.
So normally we would expect the number of listings to go down this time of year. We're down about 400 from where we were in September, but we're up over last year. So this is just interesting to me. Overall, the market's just been more sluggish. We could talk about what the reasons are in a bit as we look at the data.
Yeah.
All right. So we're just going to be talking about the monthly market update here. And I'll just do this graph. So 2 years ago, we were around 2,600. Last year, and in November, so this is for November. Last year in November, we were decreasing at 2,800, and now we're up around 32, which is what we were just saying. But looking at the curves, what we're seeing, this is talking about trends here, that we are in a natural curve. We're going to be seeing a decrease for December as well. And then we expect an increase pretty sharply starting in February, I would say, February, March.
Yeah, it kind of even Steven, December to January, as you can see from 2023, 2024, 2024 to 2025, there was a start to rise up in January. And it all depends on, I think, there's a pool of people who are waiting to go on market into the new year. They're not going to want to do this now. And some people want to jump the gun and get ahead of the spring market. And some people want to wait for the middle of the spring market. But we do start to see that activity start to go up as early as January. And then it kind of peaks, as you can see, annually as we get into spring.
Yeah, usually May.
Yeah.
All right. So list to sale ratio here, the solid line going up, the vertical lines are the total new listings, and then the line across are the sales. And what we see is exactly what Andrew was saying. So we see the listings peaking in May. And then generally we have a second spring, I guess you could say that, in September market. And we had a lot more listings than we did sales this year. So our inventory actually started to increase in October. That's what happened.
Yeah. Yeah.
So
if you're looking to put your property on market, you want to take this cycle into consideration when you're timing your home listing.
Right. And so my theory this year has been the BCG-EU strike really affected the market. And so what happened was we just had less activity because when people have uncertainty in their lives, and that went on for 2 months, then
you're certainly not going to buy or sell a home when you're in a strike position. And no, certainly you're right. And that's a big portion of, Victoria is a government town.
It is a government town. And I think, I'm trying to remember, is this the first time the BCGU has got on strike in a long time?
I think so, but I'm not entirely sure. But if somebody knows and wants to put it in the comments, they can.
Alrighty. Okay, so
so we generally consider ourselves, in a balanced market if we're between 17 28%. We've kind of adjusted this a little bit over the time because there was a time when it was considered a balanced market a little higher up, but we are we've edged down into the edge of buyer's market now, but we're still in a balanced market. I would say we're still above this number here. I don't know what the number is, but it's probably around 18%. I don't think we're at 17. So, there's no really defining line. These are just kind of ways of identifying where we are. And I certainly have found what's ironic about a buyer's market, though, is when we get into it, buyers don't actually recognize it. They don't take advantage of it. And if we bump back up into, there's a very good chance with the interest rate hikes in spring coming, we'll bump back up. And there's people on the fence because there's lots of selection and no urgency.
So just want to say, looking at this another way, you have less as a listing agent, as a seller right now, your chances of selling in the first month are 1 in 5. We have 5 months worth of inventory here or more. And then at 30%, so just a little bit bigger in percentage, you have a lot more of a chance of selling. So just understanding that if you're not getting a lot of viewings, it is likely due to the fact that we have a lot of inventory right now and we don't have a lot of sales happening. So the absorption rate or the time that it's going to take to sell is going to be longer. The days on market are longer.
Yeah. We talk about that months to sell as if there were no more properties coming on market and we continued selling at the rate we are, that how long would it take for all of the properties currently on market to come off market and sell? But as Jane was alluding to, when there's more inventory and more competition, it's kind of like going to the grocery store and you've got a product on the shelf competing with others. The more other competing products, the less chance there is somebody's going to pick up your product and walk it to the takeout counter. So the checkout. So you really want to make sure that you have a sale price or that you price accordingly to capture the attention. Marketing can help. But at the end of the day, the shiniest, flashiest marketing is still not going to make somebody buy a can of beans that's 5 times the price of the others, unless there's a really, really compelling reason.
Yeah. So we're going to get into the different components of the real estate market. So single family homes, you could see over the past 2 years, we've been hovering around the 1.25 mark, and we are steady as she goes there. We did have a peak in April and October of this year, and single family homes overall have done better than other types of inventory. So especially condos this year. So, but they also have, like, if I were to look at this line in 20 years, I would say it's pretty flat. What would you say?
Overall, yes. Interesting to see two consecutive months of, actually one consecutive month, sorry, but to see a drop here in November, it's more significant, I would say, than any of the other months prior. Although, again, I'm not seeing it in the past 2 years, but generally in the past, we also have seen a tend to drop in price as we go into November, December. So
Yeah.
I expect this will mitigate a little bit.
What's surprising is how flat it was from May to September.
Yeah. Well, yeah. Yeah. There wasn't really too much happening, and it was stable. And stable is good for business. But, as you alluded to, the strike and everything may have affected things. So.
And here are condos.
Yeah. And what's interesting is condos have been really, when we look at condo sales overall, condos have been pretty sluggish, especially downtown. But there's been, a lot of condo construction. There's a good condo supply. So condo prices have been on the low side. Sales have been on the low side. It's interesting to see, overall a bit of a bump from September, October. And then maybe just again, as expected, a bit of a down point between October and November. But
I think, though, this really speaks to averages. So the issue is of choice. And there's been a lot of choice on the market for condos. Like, the number of condos on the market right now is incredible. So I'm on the board at Habitat, and we've been talking about condos versus houses. And just like the opportunity right now to buy at the lower end of the condo market. But because now there's more choice in kind of the 550 to 650 range, I think there are more sales happening there. So, and there's good quality as well.
Yeah, I was talking to a colleague the other day, and they were saying, about looking around at $500,000 2-bed, 2-bath condos, and it's funny because for years that's kind of been it's gone up. It went up through COVID and so on, but back down to, it's kind of like a baseline of, any day of the week you can go find a older but decent 2-bed, 2-bath condo for around $500,000. It's kind of gotten back there. It's just, it's the peg that I kind of, gauge everything else based on.
So this is interesting, actually. So in terms of condos, the market was up for condos for a long time. And then now people are, I've got a question here. People now are asking, okay, what's my property worth? And it's not worth what it was worth when they paid 2 years ago, unfortunately, for condos. So people, I think, either they have to wait, or they rent it out, or they decide to take a bit of a loss and invest in something else.
Yeah. Sometimes it's not a bad idea if you do have another opportunity. There are people who sit there with, lost money in terms of the property value gone down. And if you have other opportunities, move it on. Waiting for something to come back doesn't always work. Although we do find on average, prices double every 10 years or so in real estate. So long-term, great investment. Short-term really can bounce around a lot. What was our question?
Actually, I don't really understand it. What would be the stable homes to sell in the beginning of your career with less capital to invest in? I don't understand the question.
Okay. What would be the stable homes to sell in the beginning of your career with less capital to invest in? So are you talking, is your career a career investor of homes? Is that what he's kind of alluding to? If so, you want to buy homes with good income and stable, good areas that have been well cared for, I'd say. And you want to look at if this is a hard question to answer without more details.
Yeah, I don't get it.
Yeah. Okay. Isaiah,
We'll come back to it.
maybe you can reframe the question for us.
Yep. Okay, so moving on to townhomes. So we always talk about the fact there aren't a lot of inventory in townhomes. So 2 years ago, we were at 850. However, over the past year, we have been hovering between the 800 and 850 range. I think this really depends on the area. I've been showing some townhomes recently. Royal Bay, they've just recently come down. This is new construction. They came down 50,000. I noticed that townhomes in Sydney have come down as well. So they're coming down to below 900. These are for new.
Yeah.
And
there was a point there with COVID that townhomes became that really great option for people who wanted to move up from a condo but couldn't afford a house, wanted to move down from a house but didn't want to be in a small condo. And townhouses, I think, really took off for a little while. But we've gotten back to, good selection of condos where through COVID, people, have a lot of options for price that way. And then for single family homes, our prices and selection are also pretty good. So there's a lot of reasons to buy a townhouse. I certainly wouldn't say don't buy a townhouse. In fact, right now prices are better than they have been since January 2024. So it's definitely worth, considering, but yeah. And again, this is kind of following the trend that we saw, for the single family homes. There's been a bit of a drop in price over the last couple months. So that's just interesting to see that there's maybe a bit of a slowdown. And again, we do see this in early December, into November, December, but we'll see where this goes. We'll see where this takes us.
What Andrew's saying is that there's going to be natural seasonal decline in price.
Yeah.
But overall, I would say the winner this year, for if you were going to invest a year ago, would have been housing, single family homes. Condos have not done so well. And then row townhouses have remained fairly stable with a decline at the end of the year.
Yeah, which again, we could anticipate a bounce up. And I would also say, when you're looking at these numbers, guys, it's not just about the price. It's about, as we've talked about, it's something about selection. So we could have an average price for a townhouse or a condo or what have you, that has remained very steady, but your selection of the quality of townhouse or condo at that price point may have eroded. So you want to consider too, how much selection and choice you have of good quality products to buy, because, ideally, even if you pay a little more than you would have at another time and you get yourself a great home, a great location, in a well-run condo building, you're going to be better off than paying a little more later, or a little less later even, for something that's not as good.
Yeah, agreed. Okay, so we're just going to look at benchmarks and just talk about different regional areas. So overall, in November 2025, this is for single family homes. The prices were at $1,142,000, and that's down 1.9% over the last year.
Year over year. Yeah.
Year over year. In the core, so this is Saanich, Victoria, Vic West, Esquimalt, and View Royal. We were down 2.8% to 1,276,000. So we were up over 1.3. So we can see the core is higher than the overall area. In the peninsula, the benchmark price was at 1,247,000, and that's down year over year, 2.6% from last year. And then in the West Shore region, they made a mistake.
West Ahore.
They're pretty steady though, at 1,020,000.
Yeah.
So.
Yeah. You you come up 0.1%. This is where you want to invest right now. So sure, or the bank. I think you're going to do better in the bank. In this case, you would
That's
have
so
done better
funny.
putting your money in the bank. But you got to keep in mind the cost of shelter, and if you're putting it to rent or to mortgage, so to an equity in your home. So there is still, again, a reason when there's selection in homes to buy, even if you're not necessarily making money right away.
Yep.
Okay, moving on.
So do you want to we
Sure.
can go into the weeds with this if you want, but you
We'll,
can
we'll
maybe
just
just talk about the changes.
Yeah, we're just going to go into the changes. So, if you bought in North Saanich last year, you're down 3% year over year. In Sydney, it's down 3.3%. In Central Saanich, 1.2% down.
And then in the core in Saanich East,
Wow.
they're down 1.6%. Saanich West 0.2%. So that's remains steady. View Royal up 3.2%, which is
Look
interesting.
at that. Yeah.
Esquimalt's also up 2.4%. Vic West is up 5%. And
then
this
look
is
at Victoria
interesting.
and Oak Bay. Yeah.
Yes. Victoria's down 5.9% in the core, and Oak Bay is down 10.1%. And I can say I have there's been a the difference in Oak Bay has been over the past few years is that there's been a lot of development for newer construction.
Yeah.
And those there's competition there, whereas before I think so they were at 1.9, they're down to 1.7. So just relatively speaking, what we're seeing is a cooling at the higher end of the market.
Yeah. And we want to point out this is benchmark prices, not average or median. So benchmark is a little bit of a different calculation, and it's based on they kind of imagine a standardized type of home in each of these areas and track its value over time. And they do make changes to that standardized home over time, even as a community kind of evolves or adapts and changes.
I also just want to point out what we're seeing here. The Vic West is up 5%, and the Victoria is down 5.9%. But what we're seeing is more evening in price. So Vic West was previously at 990 and has gone up to 1,039,000. And then Vic was down at 1.2 and has come down, was up at 1.26 and now is down at 1.19792. So we're seeing like the an
equilibrium. Yeah, it's looking for equilibrium, and that maybe prices spiked a little higher than they would have in Victoria and Oak Bay, and it left these other places behind. And now people are looking at the difference, the delta in price difference, and saying, I'm going to go over to Vic West. I'm going to go to Esquimalt. There's some good value. I just was showing a property yesterday that has, great water views and a nice suite down below, and the price was 1.25 million. So a little higher than average for Esquimalt, but had, you're a block from the water. And if you were in Oak Bay, a block from the water, you're paying well above that 1.9 generally. And same if you're a block from the water in Victoria along, Fairfield and so forth, again, you're paying much more. So it's a good point, Jane.
Yeah. And also when we got into real estate, it was a lot less expensive in Esquimalt than it was in Victoria. So we're still seeing that trend, but we're seeing that Esquimalt has increased in value relative.
Yeah.
So year over year changes in Souk have come down 3.5% to 822. The Highlands, which is kind of an exclusive area because there's not a lot of development, have come down 12.5% to 1.587. Colwood has increased from 1,057,000 to 1,080,000, and I can tell you, I know the exact house that creates the benchmark for that. And Langford has increased 0.9%, so actually pretty level to 1,048,000. So Langford used to be a lot higher than Colwood over the past, I'd say, 10 years, and now Colwood's catching up.
Colwood is finally catching up, and again, that equilibrium is part of the reason.
Yeah,
Colwood did not have the infrastructure Langford had, but again, there's some equilibrium happening. And
Yeah,
Colwood
and
has a lot of development now with the Royal Bay development as well. Just
and
kind of
Beachlands.
putting it
Yeah.
back on the map. Yeah, and the beachlands.
And
All right.
Mechosen is similar to the Highlands in that we're seeing a benchmark here of 1.362. This is lower than the Highlands, but we're seeing the prices remaining steady. But I will say that because I live in Mechosen, not a lot of homes are selling here.
Yep.
Okay. So there you go.
Yeah,
And
so
this is townhomes versus condos. So just looking
we're not.
here, we're not going to go into all this detail here.
Yeah, I don't think we'll go into the deep weeds on this one. But we can send you these stats anytime you want. This was a very stat heavy day because this is the first Thursday of the month. So we're going over what happened the month before and trying to do our best to give our spin on it or our take, our view. And so if you have questions or comments, did that gentleman ever
Yes.
reframe his question?
So if you have $700,000 to invest in property rent out in the local community, would it be a better investment to purchase a large family home or purchase several condos?
Well, first of all, 700,000 in our market, 700,000 won't buy you a large family home. But would you be better off? I think anytime you have more than one, I mean, Jane and I will both step into this, I think, but anytime you have more than one investment, you both spread the risk, but you also deal with, you're dealing with more than one property to manage. So personally, I think that, and especially, if you're talking about being an true investor, not living in the home, then maybe condos are better because then, there's a property management company taking care of things in the background. Jane?
Okay. So in a condo, you're going to be the average of all the sales in that building, and it depends on how the building is cared for and who else is living in the building. So you're dependent somewhat on the area. In a house, if you buy $700,000 home, or let's say in our market, maybe $1 million home that needs work, and you're going to do renovations to that, rent it out, do renovations, and increase the value because you're one house. And maybe you buy the crappy house on the good street, your lift in the end could be higher for a single family home. There are a lot of costs with condos. So there's the strata fees, there's possibly the management fees, which usually range between 11 and 13%. And then generally people get their tenants to pay utilities, so you don't have to worry about that. But I think in a single family home, you will be doing that more yourself rather than the tenant for the maintenance of the house. So it's a toss up. We, in the past, our family has focused more on single family homes.
When you're buying single family home, you're getting an interest in the land, a higher interest in the land. You have future development potential, opportunities if you play that right. And generally, again, with recent changes to zoning, there's now more development possibilities as well. So you, again, having one property where all the tenants are in one place, there's maybe more room for tenancy problems, but they're also easier to manage in one location.
And actually, Royal Bay is a great example of a situation where we've had condos and houses. And condos are now worth the price. They're the same price as the houses were when they first were built 10 years ago. So the houses have doubled in price. The condos have not.
I would also say, if you're looking for property appreciation versus cash flow and income, because you can certainly buy homes that may not cash flow, but their value will appreciate rapidly or more rapidly than something that maybe, cash flows, but doesn't go up in value.
Right.
And then there's purpose built. If you're looking at the difference between a home with multiple suites or multiple condos and you can afford that, I would say look at a purpose built multifamily. There's 3 plexes out there, 4 plexes out there, 5 plexes out there that have, the best of both worlds.
Agreed.
And you can still get a property management company to deal with, the headaches.
Yeah, because you're owning the house or you're owning the property and you're controlling the whole building. And
Yeah.
the advantage of condos is you're going to have hopefully a little more turnover. So your rent can actually increase as well over time if you're looking at it from an investment point of view. Anyway,
and I guess if you have 700,000 to invest, I suppose this is also about the power of leveraging. So you're investing in 700,000, but you're actually mortgaging that's where you're actually being able to purchase that more expensive home that actually does cover that. So
yeah,
okay. So that's me interpreting Isaiah's question to include the yes or an investor.
Okay. Anyway.
Okay. Well, we're just going to move on. Isaiah, thanks for your questions. Maybe reach out to Jane or I individually, and we'll get into this a little bit more deeply.
You're welcome.
Thanks, everyone.
Thank you. All right. So if you want specific input, like we both put in on a question, please like this post. Please share it with your friends who may have similar interests. And don't forget to comment. We love to hear what you have to say. And of course, please share our posts on social media. We love to hear from you. Andrew, how do people reach you?
Yeah, it's Andrew Plank, and I'm at 250-360-6106. You can email me info@andrewplank.com or check out the website, www.andrewplank.com. And we'll be doing our best to help you out. Jane?
Awesome. If you want to reach Jennifer, she's at 250-217-4925. She can be reached by email at jen@jenlow.ca, and you can check her out on her website at jenlow.ca. And if you want to reach me, I'm Jane Johnston, and I'm available at the Briar Hill Group, and my number is 250-744-0775. My email is jane@briarhillgroup.com, and you can check out our listings and more at briarhillgroup.com or follow me on Instagram at realtyteacher_remax_Victoria. What's your Instagram handle?
It's Plank Andrew, I believe. Yeah, it's Plank Andrew. I couldn't get Andrew Plank, so I had to go with Plank Andrew.
And there's some history there.
Yeah.
All right. So join us every Thursday at 9:30. We'll see you next week, everybody.
Okay. Thanks, everybody. We'll see you later.
Take care.
Thanks, Jane.
Bye-bye.
See you next week.
Too. Bye.